the next major financial report that we need to analyze is income statement. So in income statement analysis, we focus on different dimensions, as in the case of the analysis of balance statement. So here our main focus is revenues and expenses. So income statement reports a company's financial performance over specific time period, quarter, semester, year, and it covers that entire period. If in case of the balance it was a snapshot at the end of some particular time period, in case of the income statement it covers entire time period. Income statement is a summary of the revenues, expenses, and net profit or loss that company has. So we want to figure out what are the company's revenues, what is their expenses, and what is their net profit or loss. And based on these figures, we can make the investment decisions. Also, we use the information from the balance statement with this information in the future parts of analysis to calculate some ratios, to do a little bit deeper analysis. So there is a short video that I would like to share with you, and that will explain all logic of income statement, and then we will continue.
An income statement shows the financial performance of a company for a given time period. It shows a company's revenue and costs and is therefore a pretty good indication of the strength of the company. Income statements are also called profit and loss or P&L statements or revenue and expense statements. Income statements are prepared as a part of a company's financials. All public companies are required to submit them quarterly, regulated by the SEC. So let's look at a simple income statement in practice. Here's Mary. Mary owns her own successful flower shop, Petals, and has begun filing her income statements for the quarter. Last quarter, Mary sold $500,000 worth of flowers. This is her top line revenue. Revenue is also sometimes called sales. Next, Mary needs to add up all the costs directly associated with cultivating her flowers. These costs include things like seeds, earth, fertilizer, and electricity. These are added together and are collectively known as costs of goods sold, or COGS. Revenue minus COGS is known as gross income. Think of this as money made from both growing and selling flowers. After that, Mary adds up her non-direct costs. These are costs she incurs that aren't related to sales. Petals' costs included marketing, rent, and salaries to her 2 store managers. These costs are known as selling, general, and administrative costs, or SG&As, and are often thought of as the company's overhead. Gross income minus SG&As is referred to as operating income, or income earned from a company's operations. Lastly, Mary subtracts taxes from her operating income to get her net income. Mary now has a good understanding of the profit generated from Petals. Usually, income statements are a little more complex to put together and are handled by professional accountants, controllers, or CFOs, and follow the general accepted accounting principles.
So as a summary, we can say that income statement provides an overview of company's sales and net income. And unlike to the balance statement, which covers the information at the specific moment of time, the income statement provides the company's performance information about entire time period. Income statement, each dimension of income statement can be divided into 2 parts, and those 2 parts are operating and non-operating categories. So company can has revenues from its main activities, which will be considered as operating revenue, or it can have some investments, or it can make some money from their financial activities or some other non-operating activities. So the revenue will consider as a non-operating revenue. And also costs can be dedicated on operating activities and also on non-operating activities. So we want to understand in the income statement analysis which part of revenues comes from operating or from main activity, and which part of revenues comes from non-operating activities. And also we want to see the expenditures, what part of costs are going to operating activities, non-main activities of the company, and what amount of costs are dedicated on non-operating activities. So the operating portion discloses information about revenues and expenses that are direct result from the regular business operations, and the non-operating revenues and expenses are indirectly related from the company's business activity. So income statement also recognize the revenues when they're realized, and don't be confused and don't use the cash flow items as an income. So income statement measures the profitability, and there is another report which calls cash flow report, which shows the cash flows of the company. So don't be confused by using for the same considerations cash flow and profitability. They are very different. So the final net figure in the statement is the major interest to the investment community. If we see profit in the income statements, we're happy. So it gives us good positive sign that the company is profitable. And if we see the losses, it is a sign of warning, and we need to understand why company has losses and be careful from those kind of companies. Okay, now our purpose in the project will be simplification of income statement. As in case of the balance statement, we want to simplify those financial statements and understand the structure of revenues, expenses, and net income in main general dimensions, and we want to get the good understanding of companies' revenues, expenses, and net income. So understanding an income statement and also balance sheet is an essential, and for investors and for financial managers and for financial analysts. It is important for financial community to analyze, read, and understand income statement, balance sheet, and also the other financial reports, because it will tell us information about future earning power of the company and future growth possibilities of the company. And basically at the end of the entire analysis, we will have big picture in our brain. We will have understanding if company will grow or not, if company will have earnings in the future or not. So at the end, these hard work leads us to some financial conclusions and financial decisions. So thank you for your attention. You have a good day, and bye bye.